They still out here hating. Why them boys dissing? Know we black pirate. Real in the building. Know we got our own shit, boy, we in the building.
The FICO guy. So man, just feel good to be here finally on YouTube, you know. I mostly been hanging out on TikTok, Facebook, and Instagram, but I want to try this YouTube thing out, man. My audience starting to grow and got a lot of game to give out to you guys, man. So just want to try to grow a little bit, man, and expand. Always about transition, growing, and expansion. Y'all know I'm always on this credit thing. You know what I'm saying? Trying to get a game out of credit and talk about the importance of credit. What is credit? What exactly is credit? Credit is basically the ability to make payments over time. That's all it is. On time, all the time. All right? That means no late payment, no derogatories, no delinquencies. That's how you have the strongest credit profile. These lenders, they want to be able to see you making these consistent payments over time, all the time. This whole society that we live in is pretty much based on monthly payments. Sometimes weekly payments. You got a mortgage payment you got to make every month. You got a car note you got to make every month. You got a utility bill you got to pay every month. You got a cell phone bill you got to pay every month. You feel me? You got an internet bill you got to pay every month, right? You got medical bills for some people you have to pay every month, all right? Insurance you have to pay every month for your car. Health insurance you have to pay every month. Just think about the amount of things you paying every month. Subscriptions, Netflix, you know what I'm saying? Spotify. So our whole life is based on making payments, all right? So that's why credit is so important, because you can leverage that credit to get a lot of these different services and goods based on your credit score. So you always want to keep it straight. So it's pretty much essentially a pie chart, all right? The most important and the heaviest weighing section of the credit pie chart is late payments. Man, late payments count 35%. One late payment, man, could kill your credit score. It could put you deep down in the dumps. One late payment. Oh, man, don't rack up two. So, yes, they start to weigh less the older they are. But if they're on the report, they still count negative towards you. All right? It's what we call a negative item. So, late payments. All right, that's counts 35% of the score. It's the most heavily weighed. The second is the amount of credit usage. All right, so this is like, for some of you may heard the term maxing your card out. All right, so if you got awarded $10,000 in credit, right, and then you're using $10,000 in credit, you're maxed out. All right, so now that counts 30% of the total pie chart. That still is not higher than the late payment. So if you max out a credit card but never had a late payment, that's only weighed 30% against versus the 35% for a late payment. So that's goes to show you again just how detrimental late payments are. They're worse than maxing out the card. If you max out the card, as long as you make the minimum payment on time every month, it's not that bad. You just turn around and pay the card now, score shoot up. But if you're racking up the late payments, it's going to kill your score. And a lot of these institutions, banks, and lenders, man, they're not trying to remove the late payments. You have to fight really hard to get those off. So, hey, no late payments. Credit age. All right, so I think the age is like 15%. So that's like how long you had the account open. Ideally, you want to be somewhere around 8 years or greater to really, like, you know, take full advantage and get the highest efficiency out of that section of the pie chart. Age of credit is around the threshold, like 8 years. All right. So then after that, you got credit mix. All right. That's like different types of credit, mortgages versus installment, credit cards, revolving accounts, which are credit cards. Installment accounts would be like auto loans, student loans, things like that. Then of course, mortgages for your real estate. All right. And then the next thing is inquiries, hard inquiries. So this is every time somebody run your credit for some kind of financing, that's a hard inquiry. You want to keep that around 2 to 3. And if it's anywhere above that, it starts to negatively affect the overall FICO score. FICO is nothing but, it's the Fair Isaac Corporation. So it's a private entity. FICO is a private entity that keeps a database, and it's like a scoring model that a lot of financial institutions use, all right, for most people in America. So you got different score models. You got Vantage, you know, you got FICO 8, about to have the FICO 10 come out, and different models. But FICO Fair Isaac Corporation is pretty much the #1 go-to for a lot of lenders, banks, and things like that to see what your credit rating is. All right, now I'm the FICO guy, so that stands for Finance, Internet, Cash Flow, and Operations. And I'm an independent operator in everything that I do. I believe in independence. So finance, internet, cash flow, and operations. So that's what the FICO guy means. But FICO for the credit score is the Fair Isaac Corporation. You really have to guard this thing with your life. So negative items would be, like I say, late payments. #1. Once you start getting out, those lates go from delinquent to derogatory. And then once you keep going out farther, they turn the charge off. That's pretty much where you end up, and they will be detrimental to your credit. It would be really hard to get any other financing until you get that repaired, get it restored. And that's what the FICO guy likes to educate people about: how to restore your credit, the importance of having a strong credit profile, and leverage your credit to create income. So you want to keep that strong personal credit going, and so you can use it to leverage it toward business credit. All right. And so that's what you really want to get into, the business credit. All right. And use that to pretty much run your business, live your life as a business, and always keep your personal credit super squeaky clean and pretty. All right. And only use it to leverage to get business credit. So that's the name of the game. Credit, the ability to make payments over time.
They still out here hating, why them boys dissing? Know we black pirate, real in the building. Know we got our own shit, boy, we independent. Know we got clothes, boy, watch out for my